Welcome back to the Daily Crypto Roundup. As we roll toward a fresh trading week, the market feels like it's caught between two breaths. On the surface, it's calm. Calmer than it has any right to be after the swings we've just lived through. But underneath, there's that quiet electricity you feel before a storm changes direction. Bitcoin is still camped above that psychological 100,000 line. Ethereum's holding in the mid-threes. Solana's behaving like a proper beta gauge again, leaning risk on when the tape steadies and backing off when investors flinch. XRP hovers just above $2.30, defiant, elastic, always one headline away from a move. The broader majors are in those familiar ranges that don't tell a story by themselves, but they set the stage for one. So tonight, we're going to talk about next week the way traders actually think about next week. Not just numbers, but narrative. Not just price, but positioning. We're going to start with XRP, because the four drivers lining up there tell you a lot about where smart money thinks utility and flow can intersect again. We'll balance that against the broader setup for Bitcoin and Ethereum as we head into what a lot of desks are casually calling a catalyst week. Not because anyone's promising fireworks, but because enough little things can add up to a spark. We'll dive into the return of the security narrative, the quiet boom in self-custody and hardware wallets that tends to show up before the next leg of conviction. We'll run through the post-correction watchlist institutions are sketching on glass walls right now. And then we'll close on flows. Because whether people admit it or not, next week's tone will largely be decided by how money actually moves on Monday morning. Let's set the table simply. Prices are stable enough to talk about stories without constantly looking over our shoulder. Bitcoin is still six figures. That alone tells you fear has eased. Ethereum is steady. When it's steady, the rest of the market can think clearly. XRP is alive and liquid. That matters because it gives us a clean test case for how specific catalysts can cut through noise. Dogecoin, Cardano, Tron, Avalanche, and Polygon are all doing the same slow dance they do when liquidity is waiting to be told what to do. That's the canvas. What we paint on it now is the story. XRP has always been a coin you underestimate at your peril. It rarely wins the narrative with a single headline. It wins it by refusing to go away, and then by stacking enough small wins that people turn up one morning and realize sentiment has quietly shifted. The four drivers on the desk right now feel like that stack beginning to form. The first driver is institutional adoption. Real adoption, not the fantasy version that gets thrown around on social media. Ripple Prime is in active conversations with banks, fintech rails, and payment processors who don't want a roller coaster. They want throughput and predictability. They want to move value on-chain without handing the steering wheel to chaos. That doesn't read like a movie script, but it matters to treasurers who sign off on flows. When institutional onboarding is quiet and methodical, it has a way of showing up all at once. Not today, not tomorrow. But when you see it, you'll wonder how it stayed invisible so long. The second driver is global expansion. We've heard promises before in this space. Corridors announced, partnerships teased, pilots started and abandoned. What's different now is that some corridors in Asia and the Middle East are logging genuine transaction throughput. Not stadium sponsorships, not vapor, but volume. There's a practical momentum to that. Companies move from trials to workflows, and from workflows to habits. Once something becomes habit in payments, it's very hard to reverse. If that habit base keeps creeping outward over the next few weeks, the coin doesn't need hype. It needs time. The third driver is regulatory clarity. No, it's not perfect, and no, it doesn't instantly turn a token into a blue chip. But the dust from the courtroom is as settled as it has been in years. When the legal fog lifts, compliance teams can draw lines. When compliance draws lines, the green lights for small allocations begin to flicker. That's how a thesis moves from maybe to measurable. The fourth driver is network growth. You don't have to worship metrics to respect direction. Unique wallets interacting with smart contract functionality on the XRP ledger have trended higher for months. It doesn't need to be exponential to be meaningful. What traders look for is slope. The slope is up. Usage has a way of recruiting capital, because capital chases frictionless flow. Now, the bullish case is the easiest sentence in the world to say out loud. If two of those four accelerate together while the market mood improves, XRP can press higher. The cautious view is just as simple. None of those catalysts exist in a vacuum. If Bitcoin loses oxygen or if Ethereum flows stall, XRP will have to swim against a tide. That's not a contradiction. It's the reality of a market where beta still sets the background music. The smart stance for next week is to treat XRP as optionality. If the tape cooperates, the drivers mean something. If the tape goes risk-off, patience wins. Which brings us to the broader setup. There were plenty of headlines this week framing the majors as weak. The truth is more boring and more useful. Markets are positioning. Bitcoin sold off, yes, but it defended the place that matters. Ethereum chopped, yes, but it refused to lose the range that would have forced longer-term money to de-risk. This is what a market looks like when it's waiting for a cue. The cue can be macro. An inflation print that surprises in either direction, a shift in rate cut probabilities, a breathless scroll of ETF flow numbers. It can also be micro, some combination of on-chain liquidity and a few big orders that force shorts to rethink. The ranges are clear enough to set expectations without pretending to be clairvoyant. If Bitcoin keeps the shelf and Ethereum keeps the middle, you can build a constructive week out of that. If either one breaks in a way that's decisive, standing aside is a strategy, not a sin. Here's where we take a short break. Stay tuned, we will be right back with the stories to watch heading into this week.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
Underneath that calm, another drumbeat is getting louder. The security story. It isn't sexy. It doesn't trend on social. But when the Financial Times writes about hardware wallet makers ringing up 9-figure revenues after a year of record hacks, you're not reading a gadget article. You're reading a sentiment article. When people get scared, they scatter their assets to safer places. The important bit is what happens after. Coins in cold storage don't press the sell button on a whim. They don't flood order books when headlines wobble. That constrains free float. Constrained float plus even modest demand is how floors form. That's what the security story actually signals. The foundation getting thicker. The irony is that while mainstream attention fixates on ETFs and regulation, the conviction flows are happening in silence as people tighten their custody. There's a philosophical layer too. Every time the market gets rattled, people remember why they showed up in the first place. To own what they own. It's no coincidence that the privacy narratives we explored in the deep dive, Filecoin for storage autonomy, Zcash and Monero and Dash for transactional privacy, have been louder at the same time the security sales numbers jump. Markets aren't always logical, but they are deeply human. Fear pushes people toward control. Control hardens conviction. Conviction shortens the distance between stabilization and recovery. Now let's talk about the watch list. After the reset, call it $1 trillion in value, give or take, depending on where you measured, institutions didn't spend much time arguing about blame. They drew levels. For Bitcoin, the number with gravity is obvious. For Ethereum, the zone around the mid-threes matters because it has history. It's where trend followers decide if they're comfortable again. For XRP, a cluster in the low twos is serving as the checkpoint. For Solana, the 150s have been a magnet. Breakouts above tend to bring momentum. Failures below tend to call in profit-taking. BNB has done what BNB does, grind and ignore drama. And the market respects that. You'll hear a dozen different price targets from a dozen talking heads. But the way to think about it for next week is simpler. Levels are not prophecy. They're posture. They are the places where people promise themselves what they'll do. When enough people make the same promise, you get a move. The other lens that matters into Monday is flows. Actual money moving, not tweets. When you strip it down, risk assets care about whether there is more buying or more selling pressure on the margin. That's why the weekly inflow reports have become a ritual. Last week's read had Ethereum green again, and Solana screaming with one of its biggest weekly takes on record. That tells you institutions are not done. They are making choices. They are rotating. It also tells you something counterintuitive about the next few days. You don't necessarily need a heroic Bitcoin to have a constructive week in alts if the flow into specific names stays firm. You need a cooperative Bitcoin, steady, not stumbling. And then you need confirmation that the money pushing into Ethereum and Solana keeps showing up. If that happens, breadth can quietly improve and sentiment can follow. Let's bring those threads together so you have a clean mental playbook for Monday morning. You don't need to predict the next move to be prepared for it. If the majors hold their shelves in the first few hours, that's your permission to lean into stories with real catalysts. XRP sits at the top of that list because it has 4 clear ones. If flows come in soft and the majors wobble, you don't have to be a hero. You protect capital and watch how the tape reacts around the same levels that defended this week. If the security narrative keeps getting airtime, more coins leaving exchanges, more self-custody chatter, that's your quiet tell that the base is thickening. If the weekly flow print shows Ethereum green again, and Solana still a magnet for institutional dollars, the rotation is alive, and you trade the market you have, not the market you wish you had. According to data from CoinShares and K33 Research, institutional sentiment has flattened but not reversed. Bitcoin funds saw just under $9 million of net inflows this week, while Ethereum products gained roughly $57 million. And Solana's total inflows are now the second highest on record at over $420 million. Analysts at Bitwise and Matrixport have both noted that those allocations are not momentum flows, they're strategic. That means large desks are treating these price levels as fair value, not speculative. K33's Torbjørn Bull Jensen put it bluntly. This is accumulation, not chasing. Technically, Bitcoin's 100,000 line is now backed by one of the largest on-chain realized cost clusters in the asset's history, meaning the majority of coins last moved right around this level. When you combine that with declining exchange balances and fresh ETF inflows, it suggests structural demand is cushioning volatility, even while retail sits on its hands. Ethereum's holding pattern looks similar. Spot buying is quiet, but institutional custody balances are creeping higher, a pattern we usually see 2 to 3 weeks before broader sentiment shifts risk on again. If you've listened to this show long enough, you know our biases. We believe discipline scales. We believe clarity beats noise. And we believe the next great move usually starts on a day that looks suspiciously quiet. That's what next week feels like. Not a promise, not a prophecy, a possibility. A possibility that gets stronger if the majors keep their shelves, if the flows keep their rhythm, and if the stories we've walked through tonight earn just a little more traction. So we head into Monday with a plan and with patience. We let the market speak first and we answer second. We don't chase every flicker. We wait for the ones that hold. We respect the ranges, we watch the flows, and we give the security narrative the credit it deserves for quietly changing the base we're standing on. Most of all, we remember that this is a game of survival first, performance second. Survive the chop, the trend will pay you. That's the table for next week. Tight ranges, clear tells, real catalysts, a market that's paid its volatility tax and is deciding whether to buy stability in return. If the answer is yes, you'll feel it first in Ethereum's inflows. You'll see it next in XRP's posture, and you'll hear it in the silence of coins that aren't rushing back onto exchanges. If the answer is not yet, you'll know quickly, and you'll keep your powder dry for when the answer changes. Thanks for listening to the Daily Crypto Roundup. Drop your thoughts in the comments, hit like, follow, and we'll see you at the top.